Hello and welcome to Livewire's The Pitch. I'm Ali Selby and today we're sitting down with an investing veteran with more than 20 years experience in private credit markets to learn where he's seeing the most opportunity today. To do that, we're joined by Keyview partner and investment committee member Kevin Wah. Thank you so much for joining us today, Kevin. Really excited to feature you on The Pitch.
Thanks for having me.
You've worked across nearly every single asset class. Why private credit?
Well, I started investing, broadly 20 years ago, as you say. When I started on the buy side, I was part of a firm that invested across all asset classes. But the appeal for private credit was twofold. It was really the ability to generate outsized returns based on the risk that we assessed. And typically that risk was downside managed because we had credit protections and we were more senior in the capital structure. And I think also as an asset class, it was something that we believed we could invest through the economic cycle. So whether the economy was up or down, there was always room for private credit.
As you mentioned there, you've been working in the industry for more than 2 decades. What are the biggest changes you've seen over that time?
Yeah, I think some of the changes I've seen are the fact that we've certainly become a lot more sophisticated in terms of credit enhancements in the structuring process, and certainly the types of industries that we also lend to. When we first started, it was really a hard asset-backed business, but now typically private credit lenders will lend to asset-light companies, cash flow lends, etc. But that's obviously increased the need for more sophistication around structuring.
You talked about the industry becoming more sophisticated over those 2 decades. Has there been any lessons or experiences that have helped you become more sophisticated as an investor?
Lending, like any sort of financial investment, is obviously very much numbers-based and very much an assessment of risk and due diligence. But I think part of the journey that I've had is also really building relationships, both with our investors as well as the borrowers. There's a twofold reason for that. Firstly, it's really getting to understand why they're doing this transaction with us and understanding their motivations, and that's all part of risk assessment. And secondly, if they're really good borrowers, it's also a source of repeat business with them.
Okay, and given all that experience in markets and those relationships that you've built, where are you seeing the most exciting opportunities today?
Like I touched on in the first question, I think we really are industry agnostic. We always compare returns with risk and where we are in the capital structure. So we've lent traditionally to a lot of different companies, different sectors. So to us, it's not really much a focus on industries. It's really a function of where we see enhanced returns versus the risk that we're taking. I mean, there are certainly some underserviced industries or sectors that we focus on, but really it's, private credit, why we like it is the fact that we can invest, across most different industries.
Can we get a little bit more granular than that? Where are you specifically seeing opportunity today?
Well, one area that we're seeing opportunity is lending to family-run businesses and family conglomerates, because they typically have a diverse range of assets that we can lend against, and we can be a little bit more flexible in the types of security that we take and develop relationships with these families.
Okay, well thank you so much for your time today, Kevin. It was awesome to feature you on The Pitch.
Thank you.
If you enjoyed that too, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.